We are back with the Hub Scale podcast, where we dive into the minds of security leaders all around the world. This week, we have our first repeat guest on the show, Richard Seewald, the founder of Evolution Equity Partners, invested in some of the hottest security vendors with some major exits, and they just raised 1.1 billion in their recent fund, making it the largest dedicated security fund to date. I'm super excited to dive into all these topics today, but Richard, it's awesome to have you back on the show.
Hey, Elliot, great to be back and look forward to talk about the cybersecurity market and, talk about a new fund, which we're excited about and already have begun investing in some pretty interesting companies. So let's kick it off.
Yeah, let's do it indeed. So let's just start with the fund. How has it come around? Why this much? It's just amazing. So talk to us about that.
Yeah, so, we went out into the market post-June 2022, adjustment in the public markets, adjustment in the cybersecurity markets. And, we were out raising our fourth fund overall, third institutional fund with a target of 750 million. We exceeded that number. And the strategy for this fund is pretty much in line with what we've done in the past. So growth in early growth stage investor, focus on that series A, B, and C. That's kind of our sweet spot, where 75% of committed capital goes. 15% later stage, 10% early stage. We think that diversification provides, on a risk-adjusted basis, optimal exposure for private market investors to a difficult-to-access category, namely cybersecurity. So we're positioned well at this point in the cycle to be able to invest in some great companies. And, I'd be very pleased to talk about some of those that we've already closed on.
Yeah, no, definitely. No, excited to dive into some of the recent ones as well. But I guess just on the fund, what do you think the overall impact of this size of a fund is going to have on the security industry in whole?
I don't know if it'll have an impact on the security industry per se immediately. We hope that the portfolio companies that we invest in will have impact on the industry, and we believe they will. The entrepreneurs that we've backed in this most recent fund are doing tremendous work in cutting edge areas that, we think will have significant impact as those companies grow, mature, and expand into larger businesses. So we're very pleased. It's the right time in the cycle to be investing in cybersecurity companies. Post-June 2022, we saw imbalances of supply and demand of capital in this category for a lot of reasons. Some of the generalist investors pulled back. Some of the cyber dedicated managers also were not in a position to invest. We were fortunate. We were able to double and triple down in our category during a time period that we think is one of the most exciting to be investing in over the years. So when we look at post 9/11, post 2008, and post downturn in the market in this category, it's exactly that point in time when attractive returns have been generated, and we think we're positioned extremely well with the Evolution Technology Fund 3.
Amazing. So tell us about some of the recent investments then this year.
Yeah, I'd love to tell you about three. Firstly, Protect AI. So we invested in Protect AI this time last year. And Protect AI is one of the market leaders in machine learning and AI cybersecurity, focused on the developer and builder, and making sure that the developer and builder ecosystem are secure and positioned well to put code into production is mission critical for just about every organization that is building machine learning and AI algorithms. The company founded by Ian Swanson, a longtime entrepreneur in the cybersecurity space, having deep knowledge in machine learning and AI, positions this company extremely well in the current market. So when you think about machine learning and AI safety, it starts with the developer and the builder who's building those algorithms and applications that are put into production that, if manipulated, if infected, if breached, have significant impact now on businesses that are integrating them into their operations and day-to-day workflow. So that's Protect AI. Similarly, Torq. Torq leverages hyperautomation, machine learning, and AI to bring efficiencies to the security operations center. Company is growing tremendously and positioned well to disrupt that category and the traditional SOAR space. So two companies, Protect and Torq, that are using machine learning and AI to disrupt their categories in the cybersecurity space. And I guess lastly, I'll talk about Sweet Security. Tremendous team based out of Israel, looking at runtime security, sort of the shift right play in the cybersecurity space. We heard a lot about shift left for a while. Sweet is shifting right and addressing some of the vulnerabilities that you see once code goes into production, and Sweet addressing that runtime category extremely well. Again, tremendous team. We're very pleased to have backed all three of those companies, and we're seeing tremendous traction and growth in all three. There's a big portfolio already in place in Fund 3. We have 20 companies already invested in over the last year and a half since we launched the fund. The final close is just a final announcement. We were fortunate, again, to have capital in place, investing during a time period where we think some great companies came out to raise capital, and we were positioned well to help them and partner with those companies.
Yeah, no, amazing. Three amazing companies there. I remember on our previous podcast, we was talking a little bit about Protect AI as well, and I've been following them quite closely since then. So they look absolutely amazing, and hats off to all three of those companies for doing really, really amazing things in the market as well. I guess that leads on to the next question pretty nicely, actually. So investing over the past couple of years has changed a little bit. It'd be great to hear from somebody like yourself, Richard, who has obviously been in the space and invested in the space for so long. How has it changed investing into the security market over the past couple of years?
So one of the key areas that have changed quite a bit over the last 3 years are the focus on the balance between growth and profitability. And I talk about it in a sense of a Goldilocks zone and the optimal balance between growth and ROI-focused profitability. I think companies that have done exceptionally well, that have taken the lion's share of capital raised over the last year in the growth stage category, have been companies that navigated that extremely well, that have managed the balance between growth and cash flow profitability, and done so while still generating attractive traction, new products that address problems in the market today. So when you see rounds being raised, 100, 200 million for companies in the cybersecurity space, and you think about what's different about those, you better believe that their focus has been on that balance, that Goldilocks zone of rapid growth and ROI focus around profitability and cash flow positive. So I think that's one aspect. I think another aspect certainly has been the impact of machine learning and AI. So when you look at the amount of companies that are raising capital around the general thesis of machine learning and AI, whether it be protecting machine learning and AI from cybersecurity hacks, or utilizing machine learning and AI to better detect and respond or protect organizations, both of those areas have been hot areas. Evolution Equity Partners has been investing in machine learning and AI cybersecurity since around 2012, when we invested in a company called Cognitive Security, which was an early player in the detection and response category, looking at net flow data at the router. We backed that company, ultimately sold it to Cisco, and went on to be foundational piece of Cisco's cybersecurity, machine learning, and AI stack. Over that next decade, we continued to invest in companies that were utilizing machine learning and AI, and those companies have grown exceptionally. I think what's new is really the onset of large language models and generative AI, and how that's impacting large organizations, and the security, the privacy, that needs to be put in place for that type of asset to work well within a large organization. And we're seeing a lot of opportunity there. So I think that's the second area that has changed, really that focus on machine learning and AI. Lastly, I'd say in the early stage category, when you're looking at seed and even Series A, the size of rounds have come down a little bit. And I think as companies are getting efficient, becoming lean and mean, they're raising smaller rounds early. I think that bodes well for the health of our industry. And we're really excited over the next 3 to 5 years in a category that's slated to grow exponentially. So McKinsey Consulting looks at the next 7 years and forecasts a 10x upside on the current vended base of cybersecurity technology and services. That's tremendous upside in our category, and we're excited to be investing in companies that are growing in line with that projection by McKinsey.
Yeah, no, it's really, really exciting, and it's kind of almost a pleasure to be in the security industry with so many talented people in the space as well. I just want to touch back on what you mentioned earlier about the Goldilocks zone. How do companies get there? Obviously, there's some amazing founders out there with some amazing technology. Sometimes they get great advice, sometimes they get poor advice from people. But I guess in general, from a perspective of somebody like yourself, Richard, how do founders and teams and security vendors get to that Goldilocks zone? And what would be the best way to get there?
Well, look, it's having a product in place that is in demand by the market where you can maintain that top line growth while also rationalizing some of the costs within the business. So when you hear about businesses that are cutting costs, maybe even laying off individuals, that's a function of being able to get the company right size such that it's on that pathway and reaching that Goldilocks zone. The one thing about the cybersecurity space, there's an imbalance in supply and demand of human capital in this category. So if you're moving from one company to another, there's going to be opportunity in other cybersecurity companies. This is your business. I'm sure you see that. And, that's one thing about our industry. If you're moving from one company to another, you're going to find another role out there in another company if you're able to, provide the type of value that the industry is looking for. So I think the combination of continued growth, top line growth, gaining the trust of chief security officers while still maintaining a lean and mean business, that gets you into that Goldilocks zone. Easier said than done. It's a tough ride sometimes to do that. And it takes the discipline of a great operator. It takes the discipline of a great technologist to be able to build product that goes to market, that gains that trust, that drives that revenue. And it takes the discipline of a solid board of directors to provide that guidance and advice. And, we've seen more than a few move into that Goldilocks zone, but again, a challenge to do that in whatever environment you're operating in.
Yeah, no, definitely. And I'm kind of glad you mentioned the hiring piece there, because obviously that's what I kind of do every single day. And it's so important because even as you mentioned, the talent density within the security market is super interesting, because even application security vendors, for example, only like to hire from other application security vendors. So the pool is even a lot smaller than it is, even on a leadership level sometimes as well. So what do you think that in terms of kind of mitigating the level of hiring and all that kind of stuff within the early stage companies, how do founders get that right in terms of bringing on the best of the best people early doors to make sure they can build a team and build a product to get to that Goldilocks zone?
Yeah, great question. Look, a lot of times it's the founders network themselves where they work with individuals over the years. If they're serial founders, they might have worked with a set of individuals in other companies. If they went on to work at a larger, maybe publicly listed cybersecurity company, they probably met, large groups of talented individuals there, and they pulled them along with them as they're starting businesses. I think that's one route. And certainly another route is working through you and leveraging your network of best of breed salespeople, best of breed engineering talent, best of breed management in order to accelerate that. So you can only rely on your personal network so far, and then you want to rely on professionals in this industry that dedicate 24/7 to building a network of talent. And very pleased to have partnered with you through our portfolio companies, and look forward to doing that going forward.
No, amazing. It's been an absolute pleasure as well already, and looking forward to that very much myself. So I guess moving on to the scenario here with the changing environment over the past 3 years. It's super interesting, the market itself, and it's great points that you've mentioned there as well. But in terms of founders looking for investment, how do founders go out there right now and look for investment in terms of to gain the best investors as well? Because you want an investor like Evolution Equity Partners who provides so much value to them, not just, hey, here's a check for some money. You're providing so much value as well. So how do founders go out there and find the best investment for their particular vendor indeed?
Look, it comes down to personal relationships also. Do you get along with the investor? Do you want to sit with this individual or team for the next 5, 7 years as you build your company and build the partnership? So that's first and foremost. Is that individual does that individual fit the type of profile that you want as a partner going forward? They're not only investor, they're a partner, or they should be. They're going to sit on your board of directors, so that relationship would be right. Secondly, you want to look at the resources that a firm has, where the focus is cybersecurity. At Evolution, we have centers of excellence around cybersecurity growth that are focused on marketing and sales, product technology, business development, human capital, mergers and acquisitions, and a team that has worked in those categories in the cybersecurity space for close to 25 years. So being able to leverage that type of background and experience and dedicated resources is another thing you look at. I think lastly, when you look at the industry, being able to access high quality network in the industry, whether that be channel partners or international expansion or chief security officer networks, all of that is important and beneficial as you partner with a venture capital fund or investor. So look for all of those and make a decision based on the quality that you see, the relationship that you have with the particular investor. I'd point out also the investor should have the ability to follow on in rounds and double and triple down on the winner and back a company throughout its growth profile.
Yeah. No, that's amazing advice. I think it is. And just tell us about the team as well with Evolution. Tahir, Karthik, some amazing people. Tell us about the team.
We have an awesome team, and venture capital is truly teamwork. So when you think about the team itself, we go back working together 25, almost 30 years as we began building a company called AVG Technologies, which was an antivirus software company that we built into an internet security company that we took public on a New York Stock Exchange in 2012. And we had a front row seat in the development of the cybersecurity space when cybersecurity early on was a cottage industry. Maybe you had $3 billion of spend, a few vendors. The bad guys were as sophisticated as the defenders. And fast forward 20 years later, and you have a highly sophisticated vendor base. The adversary has become better funded, more sophisticated, positioned to cause the type of impact that they're intending to. I think when you think about this industry overall, it's really remarkable, the growth. And along the way, as a team, we've worked together, building a company, investing in over 60 cybersecurity companies overall, over the 4 funds we've put to work. And all of the partners and the team of 30 that sit in New York City, London, Zurich, and Palo Alto have been dedicated to this industry over that time period. Certainly, we've made a lot of mistakes along the way. We've learned a lot. And our portfolio companies benefit from all of those lessons as we, help them move along and equip them with the tools, talent, and access to markets that Evolution Equity Partners can.
Yeah. Yeah, I know it's awesome, and what a journey indeed. And I know you mentioned, I think on the last podcast, the difference and the scale of the market that's grown over the past 20 years as well, which is amazing. So what's the future? What's the future of the security market, and how does Evolution Equity Partners play in that?
Yeah, great question. So as the IPO markets open, and we expect over the next 12 to 18 to 24 months for that to become more pronounced, you're going to have some high quality businesses that go public and position themselves to consolidate around their platforms. I think you're going to see industry consolidation for companies that have a platform where you can acquire in adjacent markets. There's the opportunity to acquire, upsell, and cross-sell on a platform, enabling the type of revenue that positions you as one of the leaders in this segment. You can see a couple of companies come out, perhaps this year, probably more next year, and I think that'll reshape the public environment that's out there today. Over the last 4 years, roughly half of all publicly listed cybersecurity companies have been taken private. So the imbalance of that supply and demand of high quality businesses in the public market has resulted in investors having demand for more companies, and you're going to see that. So I think that's one part. I think another part will be, how technology plays out and creates opportunities for both attackers and defenders to do their job. So when you think about machine learning and AI and how that progresses, how quantum computing may impact cybersecurity over the next decade, there's going to be room to innovate, to defend and protect against that type of advanced technology. And we're seeing companies already positioned today to do that. So exciting on the technical front, larger total addressable market. That McKinsey study kind of positioned this category to be a $2 trillion market over that time period. And I think more and more individuals are entering the cybersecurity space, and therefore the talent pool getting larger and larger. So pretty exciting as we move into the second part of the decade. And we're going to be positioned well to be investing in those companies and backing best-of-breed cybersecurity companies globally.
Yeah, it's exciting. It's really, really exciting. You can see how dynamic the industry is, even over the past 3-4 years, where it's going up and down. But there's so many amazing, amazing people in this industry, and it's like I said earlier, it's a pleasure to be a part of it. To be fair, and I know there's an event coming up, a huge RSA event coming in the next couple of weeks. So what's Evolution Equity got in store for that?
Evolution Equity Partners is going to be busy at RSA. That's our Super Bowl. And we'll be busy each day. We run on Tuesday night the President's Forum during RSA week, and that's going to be an awesome event. Last year we hosted George W. Bush, President of the United States, who spoke about the future of security of our country and the world, and we expect another tremendous guest that we'll host at that event. We'll also be doing smaller events. On Wednesday, we'll be doing a showcase of all of our portfolio companies in an area close to the RSA conference, and all sorts of get-togethers and cocktail events that we're sponsoring during that week. So it's an exciting week. We look to engage with partners and potential portfolio companies during that time. Look forward to that coming up over the next couple of weeks.
Yeah.
How about you, Elliot? You're going to be there.
Yeah, I'll be there. I'll be there doing the usual thing, attending every thing I can possible. But yeah, it's exciting, and hopefully we can finally meet face to face as well, which is great.
Absolutely. Look forward to that.
Amazing stuff. So last time, Richard, I asked you, the final question was, what advice would you give to yourself if you were starting out your career again? So I'm not going to ask the same question this time. This time I'm going to ask a different question. So if you had to give one piece of advice to a founder, what would that be?
Be true to yourself. Be true to yourself when you engage with investors. Be true to yourself when you make a decision on a funding round. Be true to yourself when someone presents an acquisition opportunity. I think making sure that you're positioned well in that environment is extremely important. Um, I think that's advice that I received recently, and I think that being passed on to founders is a great way to stay level-headed, feet on the ground, and focused on delivering a mission that you may have in building a cybersecurity company or other. So I took that advice as being very positive, and I think it's a simple piece of advice, but sometimes tough to attend to when you're presented with multiple options. But making sure that you listen to your gut, in addition to the numbers, is very important.
I love it. I love it. So no, honestly, Richard, appreciate you coming on the show. The first ever person to do a second appearance on the Hubscale podcast as well, which is great. So really looking forward to seeing you in a couple of weeks at RSA, and congrats again on the huge fund and everything that you're doing for the security industry.
Hey, Elliot, thank you very much. And thank you for, all the work you do for the industry in helping the right people land in the right place, helping companies grow. Tremendous work. You're doing a great job. Look forward to seeing you at RSA.
Amazing. Thank you, Richard.
Thanks a lot.